Well, weak retail sales were partly offset by a surprise upswing in manufacturing data during October. Weakening consumer spending and global demand for locally manufactured goods, though, are the main hurdles for the retail sector. Economic growth may continue to slow down during the fourth quarter of this year and possibly well into next year. Joining us to unpack the retail outlook for 2013 is Theresa Heath, retail analyst at Stanlib. Theresa, thanks so much for joining us today. Well, we've gotten to the end of 2012. We're still waiting for this retail bubble to burst, and it hasn't yet. Obviously, there's bringing to question valuations of retailers in a very big way. What do you make of the momentum that's been driving things on the retail front and sustainability of this momentum moving into next year?
Okay, well, I think the first point that I'd probably like to make is that the retail kind of momentum continues, but it's really been focused on specific stocks. So whereas in 2009 and 2010 you could buy any of the retailers, this year really saw a big divergence in performance. So the top shares really separated from the pack, and the ones that didn't perform really didn't perform at all well. So, on a relative to the indie, actually, only 5 retailers outperformed on a price basis year to date, which I think is not really what the perception is. So if you've had your money in those big stocks such as Woolworths, Mr Price, ShopRite, then you really have done well. But the rest of the retailers have kind of tracked in line with the industrial index or the ALSI overall, more than I think people realize.
Mm-hmm. Theresa, there's retail and there's retail. I mean, there's furniture, there's food, there's clothing, and as you quite rightly pointed out, there's been diverging performances from the various stocks. And looking to the new year with the very high-profile reports that have come out recently on South African impairments and indebtedness, do you think that will be the main headwind for the sector in 2013?
I think that's definitely a concern, and certainly when you look at the retailers that have performed this year and the ones that people have picked, they've really been the cash retailers that haven't had that exposure to credit. And I think people are worried about credit. I think the retailers' overall book exposure is nowhere near what the banks are seeing. But it's obviously concerning because they're all targeting the same customer. Well, that's the sense that we get. And ultimately, some will be hit harder than others if there is this credit bubble, which at Stanlib, we're not of the view it's a credit bubble. We think it's a cycle. So you'd want to be positioned in the ones that you think are probably least vulnerable. And really the performance of Woolworths and Mr Price and the apparel retailers shows that investors are preferring those retailers with a low exposure to credit
So
sales.
what's your view on Mr Price and its valuations right now? Because not only does it derive the benefit from the fact that it is a cash retailer within that apparel component of the retail sector, it also caters to the lower LSM group and derives the benefit of the higher end consumers being forced to shop down.
Well, I think you've hit the nail on the head with Mr Price. It's uniquely positioned because it attracts customers from the range across the LSM groups. And I don't even think that higher LSM customers trade down to Mr Price. They choose to shop at Mr Price because of its fashionability. And I think that's where Mr Price has such a winning formula. So I think they've done very well in positioning themselves, but I also think that they run the business exceptionally well as well. And we're expecting further margin expansion to come through from Mr Price. So we don't think that margin expansion story has played out yet. So what I mean by that is that the business is going to be run more efficiently, which together with the sales growth growing at a nice pace, you'll see the profits growing ahead of sales.
It would have to, especially if we've got that weaker rand coming through, because a lot of its products imported.
True, but if you think about Mr Price's price points, if you have 10% pricing inflation on a 100 Rand item, it's much easier to pass it through than if you have 10% price inflation on a 400 Rand item. So Mr Price is a little bit insulated from that price perception from the consumer perspective.
Mm-hmm. Theresa, Alishia, if I was more flexible, I'd stick my leg up on the desk now and you can see my Mr Price $149.99 desert boots that have served me well over the last year. So what you say about the different LSMs is absolutely right. Let's talk about the retail sector now for next year in terms of Africa. Is it quite right that South African firms that have an expansionary Africa policy are going to be the ones to go for? And does that justify some of the elevated valuations that we're seeing?
I think so. I mean, certainly the Africa story seems to be sort of the final justification for valuations as they are at the moment. And there seems to be a lot of a lot of questions around that African growth and how to price for it. And certainly in the meetings that we have with retailers, a lot of the meeting is spent on their Africa strategy. So, you know, we're all looking for ways to understand that African growth potential and to try and peg a valuation to it. I think the thing to point out is that while Africa has sort of risen to the fore in the last year, it's been on the retailers' radars for quite some time. It's only really in the last, say, year or two that they've really started to gain some critical mass. I mean, to get their sales contribution from Africa above 10%. And that's taken a long time, but you do get the sense that the market is opening up. But I think the other thing to bear in mind is that operating in Africa is not without risks. And it's quite difficult, certainly on the apparel side, to get your stock into out of harbours and into your stores. From a food perspective, you've got to do a lot of local sourcing, so you've got to really get on top of what that local consumer wants. So it's not without its challenges, and the retail management are very clear about that. You know, they are quite cautious on getting too carried away with what Africa could be for them. Yeah. But I mean, I do think that, you know, the obvious ones such as ShopRite and Mr. Price are arguably, you know, very well placed for African growth, and I think that that's reflected in their valuations.
Of course, you've got a player like ShopRite hitting 52-week highs and standing in a stark contrast to a player like Pick n Pay, which has been the laggard within that space. Theresa, let's take a look at international buyers of retailers, because I was chatting about this sector to the traders at the desk this morning, and they highlighted that it's international buyers of retailers driving things in a big way. I mean, when we looked at these international holdings, way back when, it sat at about, 10%. You've now got foreign investors holding close to 2/3 of a company like Clicks, and that's acted as dramatic support for our local retail sector.
Absolutely, and I think the other thing that's important is that it's really changed the way we look at valuations, because what we did prior to this foreign investor surge of interest is we looked at valuations in the context of South African historical valuations. Now we're being compared very much to an emerging market. And so you've seen PEs race up, but on an emerging market basis, we're probably looking in line to slightly expensive, when before we've always traded at a discount. And it becomes a self-perpetuating cycle, because as the foreigners buy our stocks, our market caps go up, so we matter more in their indices, we feature more on their radar screens, our management are traveling more to London, New York. So these investors are getting better exposure to our retailers, whereas maybe they didn't in the past. And I think the thing that really stands out in South Africa retail sector is that our management teams are incredibly impressive. And if you speak to any foreign investors, that is always something that comes through, and they really back management. So when valuations get a little bit full, they think, well, would I rather have an expensive retailer with a good management team or a cheap one with a management team I'm not entirely sure will deliver?
Theresa, just a quick one. I've just received some data from a company called Spark ATM Systems. They're those people that got those sort of independent, not bank-branded ATMs, and they say that the withdrawals year on year from the 1st to the 11th of December up 5.72%, and they're making great fanfare out of this. That's just in line with inflation, isn't it? What do you think about the all-important holiday shopping season?
Well, I think it's always a difficult one to call. What kind of Christmas are we going to have this year? I think that people will continue to spend, because I think it's difficult to adjust spending habits, and certainly it's difficult to adjust them into Christmas. I think you probably adjust them in January, February, and maybe this year we see a little bit of a deeper Christmas hangover, sort of a January, February. And it's interesting listening to the retailers' feedback. October and November were quite difficult months for them from a trading perspective. And certainly since the middle of the year, a lot of the retailers have been saying that trading's been quite choppy. So they'll have a really good week, and then retail sales will drop right off again, and then it'll come back, which suggests to me that the consumer maybe isn't as buoyant as perhaps the valuations are pricing in. And so we need to be a little bit careful about the stocks that we're invested in, and be sure that those are the ones that we think will be able to deliver the earnings expectations. And I think that's the other point that's really important to make, is that where valuations are now, if retailers don't deliver on what the market is expecting, I think they're going to be punished, on the day of their results quite badly. And so you really do want to pick the ones that you're pretty sure can deliver.